This is the Option Pit Ticker Highlight Show. We are here every Monday at 10:30 a.m. Eastern Time, and we look through one ticker and one ticker alone from a fundamental, a chart, and a volatility basis, and then we come up with a trade idea. I already have one in mind that I am thinking about, but let's see what is happening first. I am Mark Sebastian. I am the founder of OptionPick.com. I am your only option, and I am joined by the Viking of Volatility, one Andrew T. Giovinazzi, and from the ether, speaking from the heavens, it is the Queen of the Candles, Leisha J. Leslie, or as she was known on the floor of the SIBO, simply Queen.
Good morning.
Good morning, everybody. So happy Monday. We got a lot to discuss, but obviously, we were talking about it here at Option Pit. We get together every morning and we discuss, operational things to make your experience better, but more, we also discuss markets. And the topic du jour was, in fact, quantum computing. And this is where I think Google is really interesting. So we write a really nice write-up that goes out on Fridays. And if you're not reading the email that is associated with this live video, you need to change that. It is called the Pit Report. The big one goes out on Fridays and sometimes into Saturday. And we break down that one stock in writing form. And so this week, I was just kind of looking at, and I think at this point, we've got to throw out Mag 7. It is the Great 8. Broadcom is worth $1 trillion, folks. You can't look at the major components of the stock market of the NASDAQ 100 and ignore Broadcom at $1 trillion. It's worth about the same as Tesla. A little bit less, but, it's in that whole discussion of these $1 trillion companies. And Broadcom is likely to keep going up. But back to the Great 8, I was looking at the price earnings ratios of the members of the Great 8. And what blew me away is Google just had this massive breakthrough on quantum computing. We were just listening to our CTO discuss exactly that. He said, and I quote, Google is ahead of everybody else right now. What they just did was remarkable. And it makes them entirely changes the game. So knowing what we just discovered about Google last week and their quantum chip, and the fact that Google, the stock, is sitting at a 6-month high, it might be, it is at an all-time high.
Yeah.
It's at an all-time high. And you might say to yourself, Mark, it's too late to get in. All right, now, what I want us to do is just look at these major Grade 8 stocks, and let's talk about their price earnings ratio and growth and things like that. Google coming in at 24.86. That would have been considered a growth stock 25 years ago. But in today's market, that's going to be not crazy elevated. Meanwhile, Microsoft, which is worth basically 2 Googles, 37p. Apple, which the most valuable company in the world, I still don't understand where their earnings growth is going to come in at 41.
I don't know either.
Meta, a reasonable 28.6. NVIDIA. Hey, for NVIDIA, in NVIDIA land, 5290, pretty normal, but hey, that's still really high. Amazon, 48.75. Again, for Amazon, relatively low, but still high. And then there's Tesla. They're the king of the high PE at 120. So when looking at these names,
Hey, we have Handsome Hans just dropped in.
yes, the Imperial.
Hey guys, good morning.
Yes. So when you look at the fact that Google has this, is ahead in this quantum computing game, and yet is carrying the lowest multiple. If you are a buyer in this quantum computing thing, Google is a steal. Now, is there risk? Yeah, search is a risk to them. That's their big meal ticket. I don't think anybody thinks YouTube's going anywhere. So, there is some areas where there's weakness. But if you consider that at a minimum, that search is going to continue to make them money and YouTube's going to continue to grow. If this quantum computing piece is worth anything, Google is the next NVIDIA, despite already being
The next Google.
despite already being $2.3 billion. I mean, you could argue that there is a quick path for them to be the most. This is a company where if you told me they're the most valuable company in the world, I would say, okay, kind of makes sense. They own search, they own video, and now they've got quantum computing. Not the case. So that is where I see kind of everything lining up for me and why I like Goog and Google.
Going to 200, and it just.
I think the stock's going to
go up as we're doing this.
I'm going to rely on Leisha's charts before I think anything, but I don't think long term. I think, take a look at NVIDIA. I don't think you're going to see that out of Google, but I think you're looking at a potential 30 to 40% upside in 2025. And with that, I will stop sharing, and I'm going to pass it to the Queen of the Candles.
The voice in the sky. The voice in the sky.
Thank you very much. Google gave us a little head fake on Friday, trading below my support. My Pitchfork support lines up really well with the previous high, 191.41. That's a good, really good, strong support level. Did give us a little head fake, but managed to come back today very strongly. And now it is approaching our median line to the upside, 198.61. But honestly, all the good news you guys are talking about and everything, you're looking out in the future of Google, January, 206.74. And below that, 191.41, I have support, 187.5. Looking bullish, especially after today.
I like it. Thank you, Leisha.
Welcome.
Simple and easy to understand, just the way I like it. And now, with Hans will be on it. We'll have Hans come on, and why don't you talk about if you owned Google? All right, what would you be doing with the stock here, Hans?
So this reminds me a little bit of our Amazon call. So I came on and I said, look, I'm an income trader. I want to generate income from options. But in the case of owning Google, I think there's some upside. So as I said on Amazon, I said, you know what? I'm not ready to sell calls on this thing. I think that's an interesting play. And I'm never disappointed with generating a little bit of extra income selling calls or cash secured puts or things like that. But Google just looks really good. I mean, to your points earlier, the thing is, the barriers to entry are huge. Google, the funny thing is, everyone talks about AI like it's this new thing. And Google laughs at that. They go, we've been doing this for 20 years. What are you talking about? AI's been around forever. And we've been basically grabbing bits and pieces of your personal info for the last quarter century. And we have amassed a pile of data that almost nobody is ever going to touch. And so that's going to turn to money for them. And they just have to figure out how, and they keep doing that. So I looked at the Google skew, and it's a little bit steeper to the upside, which is interesting. To me, that kind of said that people are starting to get a little panicky in terms of not wanting to miss that upside. So that, a little bit of FOMO going on out there. And I agree with Leisha that pullback on Friday was interesting. But I said in my note, I said, look, I think you want to wait for this thing to calm down, because that could give you your entry. So Amazon was at 205. I said, no, wait till 225 before you do anything. I think similarly, you want to give Google a little bit of space here and let this kind of thesis play out a bit. I think that quantum headline risk being a positive thing for shareholders, is going to continue, right? This is the new thing. This is the new, if you don't say quantum, you're not doing your job. So we're going to hear a lot more quantum and supercomputing and all that stuff. So I think you wait a little bit. I think there's an opportunity to maybe sell some cash secured puts in here. The vol's not massive, but it looks kind of interesting. But I think you give it a little bit of room. I could give this thing a little bit of room. Wait till, maybe, I don't know where your upside is, Leisha, but I would say, this thing's got a good shot at 210, 215. And then maybe you look for a little bit of a pause in here. What I typically like to do is, if something's starting to go a little bit parabolic, which is kind of, Google, I mean, we've seen a lot of parabolas in the last month. Google's starting to act a little parabolic, but I don't like to get in the way of parabolas. Everyone likes to sell and go, I gotta take my profits, but parabolas are happening for a reason. So I'd give this thing a little bit of breathing room, and then start looking at those upside calls. Because like I said, that upside skew is looking very interesting. You can sell a Jan 210, 205, 210. It's moved up a little bit here, but I was looking at about 1% for, calls that are maybe, $7 or $8 out of the money, and then a shift up a little bit with this move we're seeing today. And a call away risk of, 6% or so. That's not too bad. But at this point, I think I'd rather just kind of wait and see how this thing plays out a bit. Remember, being a good call seller is knowing when not to sell calls. So I'm kind of in that category right now.
I like that. So being a good call seller means don't sell calls. And folks, when he's saying a parabola and the skew is really big, normally, so this is a picture of January skew, which is the relationship of at the money options, which are right here, to out of the money puts to out of the money calls. Normally, out of the money puts trade at a premium to out of the money calls, because people are buying puts to hedge, and they're selling calls or covered calls. So that tends to dampen upside and bid and cause downside to get a little bit of bid. When you see this, as Hans described it, as a parabola, that's telling you there is wild speculation on both ends of the stock. And that is what is making this trade kind of interesting. And why he's saying hold off on selling calls.
Can we just call him Hans Parabola Albrecht?
Parabola?
Parabola. Hans Parabola Albrecht.
Prince of Parabolas?
Yeah.
All right. Did we lose Andrew?
Hans. Sorry, Hans.
Did we lose Andrew?
Hey, everyone on the trading floor was given a nickname.
Yes. Leisha, did we lose Andrew, or am I not seeing him?
I see him.
Oh, that's
I don't hear him though.
I think Andrew's muted.
Now? Can you hear me now?
Can I show this quick, Mark? Can I show you guys something quickly?
Sure.
Let me see here. Okay. So let me go. I'll try not to put you in the million window vortex here that sometimes happens when you share. Okay, there it is. Can you see my skew here?
Yeah.
So this is what Mark's talking about a bit. So if you look at this dotted line here, this is sort of the average of how Google skew kind of plays out, right? Your at the monies are here, and you see the people paying less and less implied vol for upside calls. Well, look at what's happening here. We've got this sharp upward slope in skew, which we just talked about. So people are reaching up for those upside calls. Now, on the one hand, that represents an opportunity to maybe monetize that. But at the same time, for me, in a stock the size of Google, that also shows FOMO going on. I think people are just maybe getting going, trying to, get reinterested in a name that was kind of forgotten for a little while, right? With the regulatory things going on and the threats to search and all that, people have been a little bit negative, a little bit worried about it. I think that unravels a little bit as people kind of reevaluate and go, okay, maybe this is a name I have to own again. So you can see this very different shape versus what it looks like, on balance. And so people are really reaching up for that. So I think that's kind of that's sort of telling a bit of a story here that we need to kind of pay attention to.
I like it. You're right. All right. So with Hans giving us a little look at skew, let's have Andrew look at the volatility, and then we'll talk trade because I have an idea.
Yeah, I gotta get.
Although I liked my idea of $4 ago, even better.
I know.
Andrew, you there?
I am. Can you hear me?
Yes.
Okay.
It's weird.
Right.
I'm going to refresh.
Everybody can hear me but Mark, unfortunately. Hopefully. All right. So here we are. So I'm going to make this real simple. So Google, all of a sudden, it was kind of trending, like we said, it was trending higher here and then up and then down. So we kind of lost the momentum. But today, obviously, we'll have an update. But the big momentum we had kind of broke. The high of the 52-week range was 195.61. So we're above that. So this is an Edge Hunter sheet called the moving sheet. This tracks volatility and momentum for me. Does a pretty good job. And right now.
And for those of you wondering what Edge Hunter is, that is our company's internal, some internal fun stuff that we've built that allows us to find trade ideas.
Yeah, I think we have
something we are working to get out to you guys. We do have a few of our professional members that use these sheets as well after a lot of training. But, don't worry if you're looking at this being like, I don't know what I'm looking at. Right. But we are working on getting some of this stuff out to you guys.
So I will say, so 10-day volatility in Google is 40%, which is pretty high. So just to give you an idea, 30-day volatility, this is an average of 30 days. The high for this year, last 52 weeks, was 40. So 10-day volatility, this is a short-term vol. We had these steep spikes from all of this quantum news. It's like Hans and Mark was saying, this is like can just confirmed by the data. Like the stock is definitely rolling. And at a 27 vol, it looks relatively inexpensive for a short-term hold. Again, 40 volatility is around 2.5% underlying, which is about $4, which right now Google seems to be moving like $6, $5 a day. So again, reasonably priced volatility given what's going on, in my view. So anyway, so from a vol point of view, just like it does not look that expensive. I'm going to grab live vol here. And so you just get a little idea. So let's look at the last 6 months. Let's go 1 year. So here's your 90-day volatility here. So like this is a little bit longer term. I'm going to go a little short term around the holidays. So, in trading desk last week, we got away with some really cheap options. And then things exploded. But even relatively speaking, I don't think the vol's that high considering
how much
what's
moving
going on here. Maybe adjusting with a call spread or something like that. But I think relative to how Google has been moving, the vol's not free. It's not as cheap as it can be, but I think you can make money buying options still, basically. That's the short answer. So
I'm with you.
And that's what I would say on the vol front.
And I have a trade.
Google volatility. All right, so we got a trade here. Let me Chewy's moving. Woohoo! There we go. Making the money. Sorry.
All right.
Let's see here. Okay, so we are doing a Google trade. Let me get my little sheet ready, Mark, for you.
Yeah,
so
this is super easy, super simple. The stock's 197.32. Is there anybody on this call that doesn't think it's going to be 200 by the end of the year? Anybody in the audience that doesn't think it's going to be 200 by the end of the year?
It has to go to, like, how does it not?
All right. There's not a single, like, we've got 4 professional traders, and this is either the mark of, this is either like the biggest surefire, or it is a clear sign that 4 traders agreeing is never a good thing. But I want to buy the January 3rd 200 calls. They are $3.95. I think Google will be 203, 204 by the end of the year.
Which one, Mark? January 3rd 200s?
These are the January 3rd 200 calls. Right now they cost about $3 and call it $3.80, $3.75, somewhere in that range. And actually, they're moving our direction. They're $3.70 right now.
Oh boy. Okay.
So the goal here is Google's going to break over 300, is going to break over 200. These have about a 40-50 delta, so that would be another $3. So if Google is 200, these $3.70 calls will gain like $1.50, and so they'll be up nearly 50%. We get to like 203. Now we're really talking. If we get to 206, Leish's level, you're going to be looking at like a 400% winner. So just manage. This is one where I'm going to buy 1 or 2. When we get to 200, I'll probably sell off 1 and then see where the last one takes me for a day or 2. That would be kind of my plan. But I just think this is one of the, this one looks to me like one of the easier call buys I've seen all year. I've got to be honest. And the metrics say the same thing. Vol gets high enough. And, our hope is that these calls that Google rallies, the volatility is going up with the rally. And so our hope is this thing takes off. We sell the calls, and then vol's higher. So now we're in a vol being the cost of the options implied volatility. That puts me in a position where I can start looking for put sales to try and enter the stock at a lower price. And there you have it, folks.
I like it. I'm going to put in a little bid for these. Let's see here.
All right. So there you have it, folks. We are buying the Google January 3rd.
What's our stop in case things in
$2.
All right. So we're going to put a $2 stop here.
And yeah. So there you have it. There's our trade. There's what we're looking at. We will, so today's the 16th. We will be back next week. We will not have our normal live session on the 30th. Option Pit is not going to be doing live fulfillment then, but then we'll be back on the 6th. So that just so that you can plan for your calendars. All right, everybody.
Also,
I want to thank you all for being here.
Mark,
I am. So
do you not hear me?
No, I can hear you. What's up?
You and Hannah. Everyone join Mark and Hannah on Tuesday. There's the link.
Yep.
Oh, that's right. Tomorrow at 4:30 p.m. Eastern time, I am going to be getting together with Hannah to talk about, I think something really cool. It's called our zero decay option trades. So I'm going to teach you all about it, and me and Hannah, and it's going to be attending this will if there was one way to add a profitable take to the end of the year while you're not doing much, like if your goal is to try and pay for all those Christmas presents, pay for the standing rib roast and all the fixins, pay for your new furnace, then you want to attend tomorrow's session. I think some of the insights that I'm going to share are incredibly valuable. If you're watching this in the email, the link is in this email. And if you're watching us on YouTube, please like, subscribe, leave a question or a comment or a stock request, and we'll take a look at it. So for Alicia J. Leslie, Queen of the Candles, and Andrew T. Giovinazzi, the Viking of the Viking of Volatility, the Vicar of the VIX, and Handsome Hans, the Prince of Premium Selling. Oh, there we go. We found it.
I like or the overload of option writing.
I
Or
think
the
I like the
overlord
Prince
of
of
option
Premium
writing.
Selling. We got a queen,
like
now we got a
Parabola.
prince, and we got a Viking, and so we're good. For Hans Albrecht, the Prince of Premium Sellers, I am Mark Sebastian. I am your only option. We hope you have a wonderful, wonderful week. Have a good one, everybody.